With Bitcoin now crossing over a $2 trillion market cap, the question we need to ask is Bitcoin now the largest Ponzi scheme ever? So in today's video, I want to break down, is Bitcoin a scam, or is there more going on than it seems at first glance?
Effectively, it's a Ponzi. And the reason why I call it a Ponzi is because it's an investment without value, which is the definition of Ponzi.
Would you describe it as a Ponzi scheme?
Yes, it's a Ponzi scheme.
My bear case is that it's a giant pyramid scheme, and people are getting sucked into it.
And call this everything from a failed currency to an open Ponzi scheme.
So by the end of this video, you'll have the answer to one question: is Bitcoin a Ponzi scheme, or have skeptics been looking at it all wrong? All right, so what exactly is a Ponzi scheme? A Ponzi scheme is a money-making scheme where one person or an entity at the top promises clients high investment returns. And instead of making real profits, they use new client money to pay out the older clients' investments when they ask to withdraw. And these scams can go on for a really long time. They usually generate fake documents, phony returns, and misleading statements to trick clients into thinking they're making more money than they actually are. While all this is going on, the person at the top is balling out. They're buying new houses, cars, and going on crazy, extravagant vacations. Morally bankrupt criminals run Ponzi schemes, and they ruin families, retirement accounts, and the lives of people in the process. While Ponzi schemes all look different on the surface, they all share the same core traits. Every Ponzi scheme has someone at the top that's pulling the strings, and they all promise consistently high investment returns, usually in a short period of time. If it sounds too good to be true, it's because it probably is. The money isn't invested at all, it's just recycled from new clients to older clients. So what does a Ponzi scheme actually look like in real life? Let's walk through some examples of Ponzi schemes that have fooled thousands of people throughout history. Now, Charles Ponzi was the original con man behind what we now call a Ponzi scheme. In 1919, after moving to the United States, Ponzi figured out that he could purchase stamps internationally and sell them for a small profit here in the United States locally. Now, this sounds like a legitimate arbitrage business, right? Well, what he decided to do was promise investors 100% returns in the first 3 months. He decided not to run a legitimate business, but to just use new client money to pay out older investors. At the same time, he kept a significant amount of the money just for himself. No stamps were sold, no profits were actually made, it was all just smoke and mirrors. At the height of his scheme in 1920, he had collected over $10 million from different clients, which now in today's dollars is around $148 million. Next up, we have Bernie Madoff. Bernie Madoff pulled the largest Ponzi scheme in history right under Wall Street's nose. Madoff wasn't just some shady character that came off the street. He was actually the NASDAQ chair and came with decades of Wall Street experience. Madoff promised investors steady market-beating returns of around 12% even during a downturn. There was no real profits and there weren't any actual trades being placed. It was just fake statements and recycled money. Like Ponzi, he used new client money to pay off older clients' returns when they asked for withdrawals, and he did this for years. By the time the scheme collapsed in 2008, Madoff had stolen $65 billion from large organizations, charities, and people all over the world. Next up, we have Bitconnect. Bitconnect was the crypto world's most infamous Ponzi scheme and scam. What they did was they promised people 1% daily returns, which is insane by modern standards, in exchange for locking up their Bitcoin on the company's platform or website. What they claimed was they had a secret trading bot that was responsible for making all these crazy investment returns. But like the other two, behind the scenes, there was no trading bot. It was just crazy Ponzi math. This scam used new users' money to pay off the older ones, and the more hype that it generated, the more people started piling in. At its peak, Bitconnect's market cap hit $2.6 billion. Then in 2018, the platform just suddenly shut off out of nowhere. The Bitconnect token crashed 90% in a single day, wiping out thousands of investors and exposing the scam as a total fraud. This fallout led to multiple lawsuits and arrests, and also one of the most meme-worthy moments in crypto history.
Hey, hey, hey! What's up, Bitconnect?
Now, these are three different scams, but they all share some of the same traits. No real profits, there's centralized control at the top, and it all ends in chaos when people try to get their money out. And next that brings us to Bitcoin, because on the surface, some of these red flags might seem familiar. It's no surprise to me that over Bitcoin's 16-year history, many people have believed it to be a Ponzi scheme. Bitcoin enthusiasts often come off as overly confident and can promise what seem like unrealistic returns in a short period of time. Now, here are a few examples from one of the most vocal Bitcoin bulls, Michael Saylor.
I think we're going to be $21 million in 21 years. The point is, if you have the superior asset, it's going up forever, Laura. Forever.
Right.
All your models are destroyed, completely devastated. Bitcoin goes to the moon.
And then we have the mystery of the anonymous founder of Bitcoin, Satoshi Nakamoto. For a lot of people, I can see why this fact alone raises a lot of red flags. After all, most scams have one mastermind at the top. And here's this unknown figure who just created something and completely disappeared. In today's world, early Bitcoin investors who got really rich have now made it their full-time job to convince the rest of the world to buy Bitcoin. And I think skeptics would say that they're just trying to convince new people to come in to continue to boost their own portfolio. But here's the truth. Early adopters did benefit, just like early adopters of things like the internet or Amazon stock or gold during the gold rush. And unlike a Ponzi scheme, Bitcoin doesn't need new investors to pay out old ones. It just functions as a protocol. The price reflects supply and demand and not a pyramid of payouts. While Bitcoin enthusiasts do make wild price predictions, the structure of Bitcoin is fundamentally different from any Ponzi scheme throughout history. All right, so let's pause and ask a question. Hypothetically, if there was a new form of money that was on its way to replacing the global financial system, what would that look like? This question is how you start seeing Bitcoin from a different perspective, and it gives you a new angle on what the value proposition might be. When most people think of the word money, they think US dollar. This is something that we all use every single day. The dollar is portable and divisible, so it works really well for things like spending money. Bitcoin has all the same traits that the dollar does, but it goes even further than that. It's even more portable and divisible than the dollar is, but it also has properties like durability, censorship resistance, and most importantly, scarcity. While Bitcoin enthusiasts can come off as overly passionate, what most of them believe is this. Bitcoin actually is not a scam. It's not a Ponzi scheme. It's the best form of money that the world has ever seen because of specific monetary properties that it possesses. They believe that Bitcoin is something that could replace the existing financial system and that it's far better than anything that most of the world uses today. All right, so is Bitcoin a Ponzi scheme? Let's put them side by side so we can compare the two. First, Ponzi schemes always have one person or group at the top calling the shots. While Satoshi Nakamoto created Bitcoin, he disappeared after launching it. Today, Bitcoin runs as open source software that no one controls. It's fully decentralized. Second, Ponzi schemes promise high, steady returns. Bitcoin doesn't promise anything. It's volatile and there's real risk, just like with any other asset. Next is transparency. Ponzi schemes hide the truth with fake documents and secret ledgers. Bitcoin is the opposite. It's completely transparent. You can verify every transaction on the blockchain in real time. Next, the source of the payouts. In a Ponzi, old investors get paid with new investors' money. Bitcoin doesn't pay anyone anything. It's a market asset. The only way to make money is if someone voluntarily buys it from you. For legal status, Ponzi schemes are illegal and usually end in prison time. Bitcoin, on the other hand, is recognized by the SEC as a legal digital commodity. And finally, we have liquidity. And in most Ponzi schemes, victims can't get their money out when it starts to collapse. With Bitcoin, you can sell or transfer your funds 24/7 with the click of a button. All right, so what's the verdict? I think when you lay it out like that, it becomes very clear. The Bitcoin doesn't check any of the boxes that describe a traditional Ponzi scheme. Governments, public companies, private businesses, and individuals all over the world are buying Bitcoin because they believe in its monetary properties and that it's better than any other asset we have available to us today. Well, I think it's a good idea for you to buy some. I don't need you to buy it for the price to go up. But I do think that you should take the time to understand what Bitcoin is and make a decision for yourself on whether it deserves a spot in your portfolio.
Do it! Just do it!
My name's Austin and I'm here to teach you about money. Thank you so much for watching and I'll see you in the next video. And if you're curious about digging deeper on what Bitcoin is, then you can check out this video here. And if you need advice on how to buy it and the best ways to go about doing that, you can check out this other video here.